Good evening, and thank you for joining us for another edition of You and Your Money. I'm Bryan Hirsch, and this evening we'll be delving into the topic of short-term insurance, personal insurance, including motor vehicle and household contents. Cover is extremely, at the moment, rates competitive. Lower premiums can easily persuade individuals to switch insurers, often without fully realizing that these lower premiums may come at the cost of inferior cover or significantly high excesses. And joining me this evening is my normal short-term guru, Craig Poger, Director of the Poger Group. Good to have you on the show, Craig.
Good to be back, Bryan.
Craig, the first question is, people are all asking, how can I save money on my premiums without reducing catastrophe covers that I need?
So, Bryan, we get asked this question very often, and one should look at making sure that the policy is accurate in terms of not overstating values. Very often, there's obviously the fear of being underinsured. You also don't want to overstate values where you're paying away premium. Have a look at some of the automatic add-ons or some of the add-ons that you're paying premiums on. Those become very costly.
Like, for example, a cell phone.
Cell phone, very often there are miscellaneous or other costs. Very often people are buying tire insurance, scratch and dent insurance. So have a look at those add-ons, make sure that those are priced correctly and that you actually understand what those covers are. And then just have a look at very often making sure that, as to your point, that you're not paying away premium on cell phones, jewellery that you no longer wear, or maybe once upon a time you were a bicycle rider and now you're still insuring the bicycle. And there's no value in doing that. So just go through your policy with your broker and make sure that it's up to date and representing the true value of your assets and the covers that you need.
Because we do know goedkoop is duurkoop. You've got to be very, very careful. Craig, you mentioned a bicycle. I'm going to share a story for you. I'm going back 40 years ago, a client of mine had a Mercedes-Benz stolen out of the Carlton Centre, a 350. A couple of years later, he had a truck stolen. And then a few years later, he phoned me in a panic because he had a bicycle stolen and he had just started to ride. So I told him, go and replace the bicycle. And then, well, guess what? They found his bicycle. Never found his truck or car. And I had his bicycle in our storeroom because I now had to reimburse the insurance company and have the bicycle. And I looked about 10 years later for the bicycle and it was gone. So that's one other thing. Craig, premiums seem to be rising across the board. Is this prevalent? Is this something that is across for all classes of insurance?
So, Bryan, we are seeing it across various classes. What we're seeing is the cost of replacement and repairs is continuously increasing. We've had a lot of weather-related claims. Climate is changing. We can just look at what's happened in the last couple of weeks with the flooding around the country and continuously flooding. So these are all having an impact on premiums going forward. And obviously these costs are trying to, the insurance companies are pricing it as best as possible, but they are vulnerable and unpredictable.
Are they becoming stricter on underwriting and so on?
Very much so, Bryan. So what we're seeing is there's a drive for insurance companies to survey commercial risk predominantly. So there's a need for that. They're understanding what they are underwriting at inception instead of at claim stage, which is obviously also very important for us as brokers and clients. And then obviously having a look at pricing the risk correctly. By having a look at a survey and understanding the risk, that allows the insurance companies to price it out correctly.
Again, another story, also those many years ago when I was very much involved in short term, I took an assessor down into Newtown, and a client of mine had a hay business feeding hay, and it was all on wood pallets, and the assessor walked around laughing because he says, this is definitely a fire waiting to happen. So as you say, and sometimes I think it's important to actually say to a client, let me get an assessor out just to come and do an evaluation, because some people who've got very high valued homes and all that, sometimes it may not be a bad idea to make use of the insurance company. Do they provide that service?
Absolutely, Bryan. For us it's key. As I mentioned earlier, underwriting at inception is very important, and a lot of insurance companies offer the benefit of having your household contents valued. which is also key, making sure that you insure it correctly at the right values, and most importantly, documenting your assets. That for us has become extremely important. If you're living at home and you've got art, jewellery, without having appraisals and valuations for these items, it becomes very difficult for an insurer to put you back in the position that you were prior to the loss. So by having all your documentation and of course keeping it backed up in storage, not at the property, because there's no value in having all your valuations and invoices kept at home, it makes it difficult. And
there's a fire.
Correct. So, and also photographs. Make sure you document your assets as best as you can, because at claim stage, it just streamline it and make it easier for you to sit with the insurance company and go through what was claimed and the items that you need to be put back in the position that you were prior.
Okay, so let's just talk about where we can save one. If one did that, one documented everything very carefully, if one took photographs, if one had valuations, would insurers consider a discount?
So they wouldn't discount your premiums based on your documentation that you have at hand. But what it does do, Bryan, is it allows you to price or add the values correctly on your policy. So if you've been overstating a ring, which has been on the policy for many years, and you get it valued, it might be reducing in value or increasing in value, but what that allows is that it actually allows you to make sure that the values are correct. So having those documentation is key at claim stage. It doesn't necessarily discount your premium. What does discount your premium is if you have a look at things like voluntary excesses on the policy, reasonably voluntary excesses, that often helps reducing premiums, and also making sure that if you do have security at home, material that is disclosing it to your insurer could potentially add discounts to the policy. So these are just ways and means of you looking at your policy. And I've mentioned earlier on, the add-ons have become very expensive. So have a look at what type of add-ons you've got on the policy and just make sure that the excesses and those type of things assist in looking at the premium.
Well, it's changed very dramatically, very much like healthcare's changed. I mean, you guys run a big healthcare business and clients are changing their plans all the time, but I would imagine they only change their plan based on an assessment made, and that's what you're saying. Assess your needs and understand what you're insuring for. Ask your broker which are the expensive items. Use bank safes. Are there available safes for people?
Yes.
I know there's an organisation that I use called Knox. I don't know whether they've got more or less boxes, what they do, but this does create, certainly with jewellery, an enormous discount.
Absolutely. If you safeguard your property and you're putting your jewellery at various companies around that offer safes, definitely would discount your premium considerably. I'd have a look at that option. And also, Bryan, just for the policyholder to move just based on price is becoming an issue, because one needs to understand what warranties are on the policy. What are your excess structures? So don't just make a decision.
What are your exclusions?
What are your exclusions? And very importantly, what we're also seeing is when an insured is making a change because of cheaper premium, is material disclosure. That is also key. Not everybody is disclosing the full claims history over a period of 3 or 5 years that the underwriter wants. And that becomes an issue, because at claim stage, non-disclosure will obviously have an issue and avoid that claim.
The point you're making is it's not the same as it used to be. It's not just buy a policy. It's you have a responsibility as the insured to actually have a look and take all the precautions in firstly protecting your goods, because the last thing you want to do is you want to be underwritten at claim stage. That's where the problems come for you. That must be a normal situation.
Absolutely, Bryan. As you mentioned, insurance companies or insurers have changed. There are different warranties, policies are evolving, more exclusions, different ways of underwriting and understanding risk. So just sit with your broker, have a chat to your broker and understand your policy and the covers that you have and the restrictions. It makes it very important.
Craig, one of the questions I wanted to ask you, we may have dealt with in some of the other conversations. What are the biggest mistakes people are making when it comes to buying insurance? You spoke about understanding, going for cheaper without understanding what you're giving up. I say that with medical aid as well. When you're downgrading in a medical aid and saying, well, I've now got a gap cover and I've got a medical aid, it does not equal a comprehensive cover. Understand what you're giving up. So what are the...
So some of the concerns or issues are underinsurance. People are changing values on policies and not insuring at the replacement value. And I mentioned it
Let's
earlier
talk
in the
about
program.
replacement value at the moment, because people don't always realise two things. One, the municipal value of their homes are normally more at a higher value than what you can get for your home. So they're saying, why should I insure it for replacement? And then contents.
Absolutely. So the municipal values are market related. Doesn't necessarily mean that you're insuring all the value is at replacement value. Insurance companies look at the replacement value of your home and contents. So that's and that unfortunately results in underinsurance. Underinsurance where is a claim where you get partially paid because you don't insure at the full value or the full replacement value. And that's one of the issues that we deal with very often, Bryan. And that's also when clients or policyholders decide to move, just make sure that your values are correct, that there's no more warranties or the policy and the excesses. Then you understand what you're buying and consult with your broker. And just make sure that you're moving for the right reasons. And that because no policy is the same, power surge is limited, accidental damages is limited in most cases. So one needs to just understand the limitations and just make sure that you have a policy that is tailor-made for your risk.
Yeah, Craig, there's a big thing that I'm often asked about. Just explain insurable interest when you're insuring something.
So Bryan, I can't add your car into my policy because technically there's no insurable interest. So what the insurance companies are saying is that you need to have a financial interest in that asset that you are looking or insuring. And that again, people very often insure other people's assets because they could get discounted premiums on commercial policies, making sure that, that you have what we refer to as an insurable interest, that the policyholder has a financial interest in that asset.
Okay, that's very important. Anyway, we're going to take a short break. Stay tuned and we'll be back.